Consumer confidence has improved slightly, rising from 14 points in the second quarter to 15 points in the third quarter. That's according to the latest FNB BER Consumer Confidence Index released a short while ago. On the desk with me now is FNB Chief Economist Cees Bruggemans. Cees, thanks very much for joining us. So we had a small uptick over the quarter from 14 to 15, but to put it into perspective, the index has come a long way over the past year, in the past 2 years in fact.
It's come a very long way and very fast in a surprising manner. So far this year, for the last 9 months, we effectively have been at strong boom time levels if you consider the peaks that we had in 94, 1988 and 1980. And we are not really all that much off the peaks that we had in 2006, 2007. So at plus 15, which is where the index is at the moment, we're already at very high territory compared to the -4 that where it was the low point in late 2008. And that in itself never really went to recession levels where you're used to seeing, say, -20 to -30. So the index generally has sent very positive signals and has come back very strongly and continues also in its detail to send very positive signals.
Why do you think we're seeing a slight disconnect between the consumer confidence index here and perhaps private sector borrowing? So we've had those private sector credit extension numbers. People aren't willing to borrow. There is still a bit of depression in the economy. We know unemployment remains high. Why do you think people are appearing to be so confident in this survey?
I think that's the past. And specifically in recent quarters, we have found that key market segments still had a very negative response to the question, is now a good time to buy durables, which would tie in with the credit question that you've just mentioned. However, in this particular quarter, we're seeing quite a change in that attitude as to whether now is a good time to buy durables. The critical key market segments, I think, for us, are starting to show a liveliness that we haven't seen throughout the past 2 years. And in that respect, I would suggest that it's a good signal for anything dependent on credit. It also, of course, confirms what you see in the motor industry.
And of course, this survey was done before we got the interest rate cuts last Thursday. Do you think if it was done today, you'd have seen an even bigger improvement in some of those categories?
Possibly, but of course there was enormous amounts of speculation about an interest rate cut. Does one buy on the rumor and sell on the event? I do think that particular speculation was already very much in people's expectations. Well, given that the markets, of course, had a 100% discount as to that interest rate cut happening.
Cees, we're seeing slightly different results from slightly different segments of the market. And if you look, perhaps white consumer confidence gained 9 points. It's up at 10 points now. Black consumer confidence steady at 20. Why are we seeing this huge disconnect between perhaps black consumers and white consumers?
They have varied over time. Prior to 94, they were in a very tight embrace. Past 94, we had a period where they were at very much opposite ends of a very wide spectrum. From 99, 2000 onward, over the cycle, they tend to march together. Now, specifically, the gap tended to open up a little earlier this year, but now the gap has closed again, or not closed again, has narrowed fairly substantially. And most of the movement this time has been from the white consumer side, while in fact black consumers have remained unchangingly at very high levels of confidence. It is therefore, I think, not so much on the black consumer side as that I look on the white consumer side for explanations as to what is changing. And for them, they specifically have a much higher reading now compared to the previous quarters on how they see their own finances, a very strong improvement in that, which has to do with wage and salary increases, with bonus expectations, but not just the income side. It is also the asset markets as to how people see their situation improving. And that, of course, also then ties back into the interest rate picture. While the white consumer has then made quite a jump at this point as to now whether now is a good time to buy durables, while the black consumers have generally remained at a high level there in any case. So for me, the question is really about white consumers starting to catch up, whereas black consumers were already there for some time.
Why do you think white consumers were lagging black consumers in the market?
I think specifically because of the interest rate picture. And that
okay, so more exposed to interest rates perhaps. You say gain in financial prospects, and that's what you're talking about for white consumers, up from 14 to 24. How's it changed for black consumers?
That is also up, but only about 3 points and at a high level at plus 27. So black consumers effectively have already been at these levels. White consumers are only now starting to reach these levels. But these levels are very high in terms of the history of the survey.
We also have quite big gaps between English-speaking consumers and Afrikaans-speaking consumers, where English-speaking consumer confidence is unchanged at +4. Afrikaans speakers have moved from -5 to +4, so both the same now, but Afrikaner moving from a very different place.
Afrikaans-speaking people, again, apparently catching up with a broader spectrum.
How about the high-income earner and the low-income earner? Is there any change between those two?
Low-income earners are on net positive, but slightly positive, while the high income, that is then over 10,000 a month income, was already recovering strongly, but has now taken a further jump. So the gap between the high, over 10,000 a month, compared to the low income, which is 2,000 or less a month, that gap has widened. Indeed, when it comes to own finances, the high income group is now at +35. It shows a very large majority, net majority of people saying they're confident about their own finances.
Of course, we're expecting the Reserve Bank's quarterly bulletin out in the next couple of weeks or so, and that is going to tell us about household debt levels. Now, the previous bulletin for the second quarter showed they were still very close to those historical highs of quite close to 80%. Do you think we're going to see that coming down in the next reading, just given the consumer confidence that is building in this market?
Certainly the quarterly data will show a further decline. The interest rate cut, of course, I think will make it easier for those with high debt, to the extent that they want to deleverage further. So I would expect in coming quarters to see that debt ratio specifically coming off. And yes, it ties in with the confidence that people feel easier where they are compared to, say, 12 months ago, when all these numbers were a lot more doubtful.